Hello friends, I'm Sakshi. Welcome to my channel, SM Study Master. If you are a commerce student, you must know the basic accounting terms. In this video we will discuss about this. Before starting the video, if you have not subscribed my channel, then please subscribe it. The topics we will discuss in this are assets, liabilities, capital, relationship between capital, assets and liabilities. First of all, we will discuss the term assets in detail. Anything which will enable a business enterprise to get cash or a benefit in future is an assets. Or we can say that assets are the property owned by the enterprise. Some of the examples are cash and bank balances, stock, furniture, machinery, land and building, bill receivable, money owning by debtors. Now we discuss about classifications of assets. As you able to see in this diagram, that is current assets, non-current assets, fictitious assets. First of all, we discuss about current assets. We can say these assets by other names like short-lived assets, or we say active assets. Basically, current assets are those assets which are meant for sale or which the management would want to convert into cash within a year. Prepaid expenses are also included in current assets, although it is never realized in cash, since service or benefit will be available against these without further payment. The amount and nature of such assets keeps changing continuously. So, these assets also known as floating assets and circulating assets. Some of the example of current assets are like debtors are expected to be converted into cash within a reasonable short period. Another example are like stock is continuously sold, and we also say bill receivables are also converted into cash. Let us discuss this in brief example like if a businessman purchases goods for cash and these goods are sold to X on credit, X becomes our debtor, and it means the stocks are converted into debtors. Again, if a bill receivable is received from X, it means that debtors are converted into bill receivable. And again, after some time, bill receivable will convert it into cash. It shows that all the current assets are finally converted into cash. Now we discuss about non-current assets. Non-current assets are referred to those assets which are held for continued use in the business for the purpose of producing goods and services, and are not meant for sale. Examples of non-current assets: long-term investments, fixed assets, such as land and building, plant and machinery, computer, motor vehicles, furniture. Now we discuss about the classification of non-current assets. That is, tangible assets, intangible assets. Tangible assets are those assets which can be seen and touched. Or we can say that assets which have physical existence. Examples of tangible assets are like land and building, plant and machinery, computer, motor vehicles, furniture, stock, cash. Other type of non-current assets is intangible assets. Intangible assets are those assets which do not have a physical existence and thus cannot be seen or felt. Intangible assets are also valuable assets. For example, with the help of patents, businessman is able to produce goods, and his goodwill helps in attracting customer easily. Therefore, the intangible assets help the firm in earning profits as much as the tangible assets. Both tangible assets and intangible assets are valuable assets. Value of intangible assets is based on the benefit and facility available to the business from such assets. Some examples of intangible assets are like goodwill, patents, copyright, trademarks, computer software, prepaid expenses. Now, third type of assets, that is fictitious assets. Fictitious assets are also called nominal assets. These are those assets which cannot convert into cash, or no further benefit derived from these assets. These assets are not really assets, but shown on the assets side for the purpose of transferring them to debit balance of profit and loss account. So we conclude that such assets include in debit balance of profit and loss account an expenditure not yet written off, like in advertisement expenses. We will continue this topic in next video. I hope you like the video. Subscribe my channel so that you will not miss the upcoming videos. Thank you for visiting SM Study Master.